Hey guys, it's Rudy coming at you live from Palm Beach in Florida. It is Friday. It is September 26th. Can you believe it? September has just come and gone. What I want to do today is talk a little bit about uranium. And very specifically, I would like to talk about Uranium Energy Corporation. But before I get into a discussion on Uranium Energy Corporation, I want to share a little bit of background with you about the company. Obviously, I've mentioned it a couple of times in previous videos. And just a few days ago on Wednesday, they had their conference call discussing their fiscal year 2025. And I'm going to share some of those slides with you. So I'm not actually analyzing the stock here. I'm just giving you some information, and then you can tell me what you think. But let's first look at a little bit of background information. So I had a conversation on the comments section of the previous video that I posted with Black Swan's Fine, and we talked a little bit about uranium and nuclear technology in general. He made a couple of comments basically saying, quite rightfully, it takes at least 10 years to scout a location, do permits, etc. Guys, the nuclear industry is dead. He added the demand is zero. I replied with a copy and paste from the World Nuclear Association, noting that China has approximately 33 nuclear reactors under construction, and asked the question, is this not true? So we had a little bit of to and fro on the question about uranium, and specifically, obviously, as it relates to nuclear energy. I fully accept that many people know more than what I do, and I'm very happy to have this type of debate, because what it does for me is it encourages me to dig a little deeper and do my homework and do proper due diligence, as you should do, before you, for sure, before you put any money on the table. But what I did is I cheated just a little bit. So I went to my in-house analyst, whom you can also refer to as artificial intelligence, or Chat GPT, or whatever you want to call him or her or it. And I asked the question, give me the top three bull and bear case narratives for uranium investment or not, right? So what I'm doing here is I'm actually just sharing information with you at arm's length, because this is not from me. It's actually from artificial intelligence. I just asked the question, acknowledging the fact that there are many things that I don't know. So why don't I ask someone smarter than what I am? And in this particular instance, the smarter than what I am is artificial intelligence. Number one, explosive demand for nuclear revival and the tech sector. And the chatbot mentions a couple of examples: AI data centers, over 28 gigawatts of new nuclear capacity is linked to digital infrastructure, with major deals like Amazon, alongside China's aggressive reactor builds. Number two, chronic supply deficits amid geopolitical tensions. He talked about Kazatomprom slashing 2025 production guidance by up to 20 million pounds. There are disruptions from time to time at Cameco's MacArthur River. In Niger, now a couple of years ago, they had a coup, and Niger basically just nationalized all the assets, including one that I was closely familiar with and linked with, which was GoviEx Uranium. Uh, GoviEx had assets in Niger and in Zambia. So effectively, their portfolio was slashed in half by the government of Niger after a military coup, just scooping the asset and nationalizing it. That's still ongoing. I'm not sure what the outcome is going to be there, but it's not good. Utilities covered only 27% of replacement needs via contracts in 2025. Bullish price forecasts and institutional capital inflows. Of course, this is debatable whether it's good or bad or whatever. Spot prices hit almost $80 in mid 2025. Citi projected $100 per pound base case. Citi's projections are usually wrong, but I'm mentioning it just because it came up here. Commodity funds like Sprott raised $200 million to acquire 2.3 million pounds. You know, when institutional money comes in, usually it's later rather than earlier. And just because institutional money comes into any equity or investment doesn't mean that you should follow and do the same thing. How about the bear case? Inherent price volatility and market corrections. Obviously, the price has been bouncing up and down. Spot prices were down 10% from the 2024 highs. Oversupply risks from underperforming minor small-scale producers locked into long-term contracts may face operational shortfalls. forcing aggressive spot market sales that flood supply and cap prices. There's Citi again. I don't really care about Citi's projections because, as I said a minute ago, they're always wrong, whether it's bullish or bearish. Regulatory delays and uncertain demand realization, policy hurdles like Western Australia. Man, Western Australia is just falling off a cliff here politically. This is a horrible environment to try and do business in. If you're Australian and you happen to be watching this, please correct me if I'm wrong, but man, Australia is becoming a tough place to do business. Australia's uranium mining ban, can you believe it? Slow reactor build timelines, demand growth hinges on actual constructions, high capital needs, right? So basically, this is sort of the bull case and the bear case. I think it's all valid, whether you're bullish or bearish. You can let me know in the comments. Let me know what you think. But let's take a look at Uranium Energy Corporation. Now, before I go into their year-end presentation deck where I scooped a few slides, I just want to share some information about the company with you. Over the past year, it's up about 100%. It would have been a sweet deal if you had gotten into Uranium Energy Corporation at about $4. Just a few months ago, I opened a position in Uranium Energy Corporation in July, and my cost base is about $6.60. So in just 2 months, it's basically given me a 2x here. So I cannot complain too much about Uranium Energy Corporation, regardless of the commodity or the commodity as a feedstock for nuclear energy. Recent insider transactions, I don't have anything very recent. I went to Simply Wall Street for this particular slide, and it's not updated sort of in real time, if I could put it that way. So there may have been some insider buys or sells. According to my records here on Simply Wall Street, there have been no buys or sells. Uh, on one hand, you could say if the insiders aren't buying, then why would I be buying? On the other hand, you could say if the insiders are selling, why on earth would I want to buy the stock at all, right? So that's maybe something that can form part of your due diligence, regardless of what it looks like on either side of the ledger. The balance sheet gets five check marks out of six. The red X there is just because there was no data available for the most recent period, and that is because they've just recently started production. Uranium Energy has a total shareholder equity of about $900 million and total debt of $0, which brings its debt to equity ratio 0. And total assets and total liabilities, 1 billion and 115 million respectively, zero debt. And at the bottom there, you can see $1 billion total assets. This is also from Simply Wall Street, which has this beautiful black background. The debt level is debt-free. UEC, or Uranium Energy Corporation, has no debt compared to 5 years ago. You can see some snapshots from the balance sheet down here at the bottom. I took this from obviously Simply Wall Street as well. That's why I added the logo there. Long-term and other assets, 82 million. Inventory, 76 million. I'm going to talk a little bit about that in just a minute. Cash and short-term investments, $70 million. Simply Wall Street's fair value on the stock is $27.62, which is 100% up from where it is now. However, it's based on a discounted cash flow model. A discounted cash flow model, you sometimes hear analysts talk about it. They talk about the DCF. Discounted cash flow model is a horrible model, but it's the best we've got to help make our guesswork a little bit simpler. The problem with discounted cash flow is it requires so many assumptions, and if you get one of them wrong, there's a ripple effect. So it's sort of like, the one leads on to the next, leads on to the next kind of thing. So if you get the first one wrong, then everything else is kind of out of whack as well. Anyway, they have 9 analysts covering the stock. So if you want to follow the analyst schmanalists instead of listening to me, you can also do that and just sort of see what they're saying. Effectively, between the 9 analysts, they're saying it's below fair value, trading below our estimate fair value of 27.62. So anyway, that's what they say. America's fastest growing uranium company. So let's take a look here at the company, and then you can let me know in the comments what you think. The first thing is it's in Wyoming predominantly, right? So it's not exclusively in the United States, but because it's domiciled in the United States, there are massive benefits. I'm going to talk about that in just a second as well. For Uranium Energy Corporation, the fact that they are a US domiciled entity and the fact that you have a very favorable administration currently in the White House is very beneficial to Uranium Energy Corporation. Low cost production achieve total cost per pound, $36, right? So when I started out and I showed you the analyst comparison between the bull and bear case, we know that the spot price right now is around sort of, high 70s, $80 or so. Their total cost per pound, 36.41. It's not a bad margin. In fact, it's a better margin than most of the energy companies' margins, where the average break-even cost is approximately $45 per barrel. And right now, the WTI price is only about $60, right? So, or 60 something anyway. So total cost per pound, you can also refer to as all-in sustaining cost when it comes to sort of a mining type company. 36.41 with a selling price at least double that. It's not bad at all. ISR production ramp up. Burke Hollow, almost 90% complete. It's America's next ISR mine, targeting November 2025. Robust balance sheet, 100% unhedged, $321 million in cash, inventory and equities at market price, and no debt. Companies that don't have debt very seldom, actually never, go out of business. They might be acquired and they might merge with someone else, but they don't go out of business. Having no debt is probably one of the strongest lines that you can include on your balance sheet, regardless of whether you're selling hamburgers, barrels of oil, or pounds of uranium. Next one, financial highlights. So I just mentioned the 321 cash, inventory, and equities. Strong balance sheet with no debt. $66.8 million in revenue, right? So the revenue has only just begun. So you don't have the ability to look back at Uranium Energy Corporation over the past 5 years and say, how is it done? You can look at it from a stock point of view, but not so much from a revenue generation point of view or a cash burn point of view, because it has changed, and it only changed mostly this year. 1.4 million pounds of uranium in inventory. This is valued at almost $100 million at the current market price, and that excludes about another 130,000 pounds of the initial Wyoming production, which is now also available and warehoused. So right now, the U.S. warehoused inventory is anticipated to expand by another 300,000 pounds through December 2025. Purchase contracts at $37.05 per pound, in addition to uranium from operations. There's no particular need, because they're not burning cash, for Uranium Energy Corporation to try and execute some contracts to sell the uranium. They can actually sit on it and wait for the price to go up. If the price goes down, they can just sit on it for longer. But if they decide they want to sell the uranium that they have in inventory, for example, at $100 per pound, they can just wait till the price hits $100 per pound, and then free it up to go into the market. So I mentioned Wyoming a minute ago. These are where their assets are located. And the crux of the benefit here for Uranium Energy Corporation is Wyoming, Arizona, Texas, a friendly nation. We used to be friends anyway. Saskatchewan, none of it, or whatever. So Saskatchewan, of course, is the area where Cameco is headquartered and where they have their mines, where they're producing uranium. Cameco is currently one of my top holdings in my equity portfolio, but they're in Saskatchewan. But Uranium Energy Corporation, for the most part, is domiciled in the United States. So now, as a result, they are the largest production profile in the US, with 12.1 million pounds per year in licensed capacity. They have 4 production growth pillars. Irigaray is a processing plant. It's 4 million pounds per year. It's licensed production capacity. 4 fully permitted satellite projects. They have Hobson, Sweetwater, and Rough Rider, which is in Canada. So they are up and ready and available to actually launch United States uranium refining and conversion. Their plan is to become a fully integrated company, which is vertically integrated from the point of view that they want to take care of the mining and processing, the refining, conversion, the enrichment and fuel fabrication, and the small modular and large nuclear reactors, designed to give Uranium Energy Corporation end-to-end capabilities, providing a secure, geopolitically reliable source of uranium hexafluoride, which is the feedstock needed for uranium enrichment. vertical integration here would be phenomenal. We saw very recently with Cameco, which pretty much covers most of these three pillars over here, buying Westinghouse, right? The small modular reactor manufacturer. So vertical integration seems to be a winning formula in this particular industry right now. How about the demand case? So contrary to my references to artificial intelligence and our chats on the comments section that I referred to at the beginning of this video, this is Uranium Energy Corporation's picture of demand for uranium, which significantly exceeds supply, right? So they're saying there's a projected production gap. And in 2025, 26, it's 51 million pounds. But look where it goes 2025 to 2045, 1.75 billion pounds. The graph on the right-hand side here is actually even easier to read because the black line here shows the demand base case, which is what we need today. And if that increases because of the fact that there are more nuclear reactors near completion or still being built, or at least being planned for construction, then you move to this red line, which puts you in this environment here. So US utilities are the world's largest consumers of uranium, with a current demand of 47 million pounds per year. And the current production gap is 51 million pounds already for 25, 26. There is unprecedented bipartisan and White House support, which is almost a ridiculous statement to make because nothing actually seems to be done in a friendly manner at all as it relates to almost anything when you look at the US from the outside looking in. And as you can tell by my weird accent, I'm not a US person by birth. So I watch some of these things in amazement. And sometimes I'm absolutely astonished at the bickering and infighting, very often over nothing. As it just continues on a day-to-day basis, it must be absolutely exhausting. And if anyone ever were to ask me if I'd like to run for US Congress, I'd rather just die by death by 1,000 paper cuts as opposed to taking on a job like that. What has happened very recently, though, in November 2024, so just a year ago, Russia temporarily banned exports of enriched uranium to the United States. Oops, because that's where we get it from. In fact, most of the uranium from Kazatomprom just goes across the border, just north of them to Russia, where it gets enriched. And so if Russia bans exports of enriched uranium to the United States has a problem. In order to address that problem, in March 2025, President Donald Trump signed an executive order to increase American mineral production. And of course, uranium is a critical mineral. And of course, it is the feedstock for nuclear energy. So this is something that is absolutely very much in demand right now, and one of the reasons for the huge spike in Uranium Energy Corporation's stock price. May 2025, 4 executive orders represent an unprecedented level of policy support to revitalize the US nuclear industry, including targets 4 times the increase in nuclear capacity by 2050, reinvigorates the nuclear industrial base, accelerates permitting reform, and invests in advanced reactors. Domestic uranium takes center stage. President Trump, as I just mentioned, signed multiple executive orders, and he aims to end U.S. reliance on foreign uranium. The U.S. government, in turn, has also banned Russian uranium, cuts red tape, and incentivizes new nuclear technology. And there are a number of demand drivers here on the right-hand side of the screen. Electricity demand, right? So Amazon entered into a PPA with Talon and invest in SMR advancement. Microsoft invested $1.6 billion to revive 3 Mile Island, etc., etc. You see where I'm going, right? So it seems to me, just at a high level, and as I've now said twice, a lot of people know a lot more about this than what I do. But it seems to me if there is a bull case, and in addition to that, as a result of the demand and the favorable policy direction of the current US administration, the demand case is growing as opposed to anything else. So I'm going to wrap it up here, and then I look forward to your comments because, as you know by now, I read them all, and I will reply to most of them unless you send me a thumbs up, in which case I'll just probably send you a thumbs up back. But I'd be interested to know what you think of Uranium Energy Corporation. Is this a buy, a hold, a sell, or is it something you should just avoid entirely? I don't know, right? So I've already told you I currently have a position in Uranium Energy Corporation, and I've also had a position in Cameco for about 4 years now already. So, I mean, time flies, right? So I always say my typical holding period is 3 to 5 years. And I've had Cameco in my portfolio now for about 4 years. It's one of those examples of sometimes you just get a little bit lucky. And for Cameco, my cost basis when I opened the position was about $24. I added a little bit more and also reinvest dividends. So my current cost base is about 28 bucks or something Canadian. And Cameco today is trading at just over $100 Canadian. So uranium has been good to me. And then of late, Uranium Energy Corporation has been phenomenal because in just 2 months, it's given me a 2x, right? So that's where I'm at. And that's where some of my money is parked. But I'm more interested in learning from you. And if you have anything to share, I look forward to reading it in the comments and discussing it with you. Thanks for watching. If you like my content, please subscribe, and I'll be back again soon with something else. Take care. Bye bye.